Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Master along with Paul Sweeney. You know, Paul, I always feel like there's certain companies, doesn't matter what the story, we're going to talk about it, and this one has to do with Apple.
Has to do with Apple. They're cutting back their iPhone production a little bit. We'll have to get the latest on what that means.
All right, first up, though, let's get back to your top business stories. A look at that trade. Here is, once again, Charlie Bell.
Hi, thank you very much, Carol Master. Just about every update been telling you stocks are higher. Certainly the case right now. Apple, briefly, Apple trading down by 0.1%. We've got more on the Apple story coming up. But right now, the Dow higher by 427 points on the Dow. That is a gain right now of 1.3%. S&P's up 33, higher by 0.9%. NASDAQ up 82, a gain there of 0.8%. 10-year yield 4.20%, and the 2 years yielding 4.71%. Right to hydrocarbons. Let's begin with natural gas. Big story today, surging 9.2% now at $6.98 per million BTUs. This on a day when West Texas Intermediate crude is down. WTI lower now by 0.7%. Spot gold down 0.4%, $16.75 the ounce, and Bitcoin down 1.7%, 20,773 on Bitcoin. So it is an up day on Wall Street as investors focus on the midterm elections tomorrow. By the way, want to put in a plug for complete election coverage on Bloomberg Radio. Also, inflation readings later in the week. We get the consumer price index on Thursday. Stephanie Roth is senior markets economist at JP Morgan Chase, and she sees cuts and freezes in technology as a broader sign, perhaps, for the rest of the U.S. economy.
This is a bit siloed at the moment, but we should start to see a slowdown in job gains, and that should ultimately result in job cuts, but we think it's still early. We'll probably see that in around the second quarter of next year. We're expecting recession to hit in mid-2023, and that's a clear indication of that.
And specifically, we've got Meta Platforms beginning layoffs this week, according to the Wall Street Journal, cuts that potentially will affect thousands of workers. Right now, Meta Platform shares are advancing by 5.4%. Sources tell Bloomberg Apple expects to produce at least 3 million fewer iPhone 14 handsets than originally anticipated this year. More on the topic coming up in just a moment, right here on Bloomberg Business Week. Recapping the Dow, the S&P, NASDAQ all advancing. 10-year yield 4.20%. S&P up by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So should we talk about Apple a little bit?
Let's do it.
Let's do it. Apple cutting its outlook for iPhone shipments because of China lockdowns. First of all, some Bloomberg exclusive reporting on this one. So we want to get kind of into the details, what it means potentially. So let's get to it. Our team, we had Bloomberg's Debbie Wu, Mark Garman, and Tagashi Moshizuki, hopefully I'm saying it correctly, all reporting on this story throughout the weekend. Mark Gurman, though, you know when it comes to Apple, he's the guy we want to talk to. He's technology reporter at Bloomberg News. He's on camera from our Los Angeles bureau. I can't speak, Mark. It's a Monday. I have no excuse. It's earlier out by you. How are you, and what's up with Apple?
Yeah, thanks for having me. I'm well. Apple, maybe not so much.
Yeah.
So two issues going on here. Let me start with the first one. One is a supply issue. So over the past week or two, we've been hearing that there are new COVID-19 related lockdowns happening around Apple's main production facility at Foxconn in China in the Zhengzhou region, right? And what that means is that the output for the final assembly of the iPhone 14 Pro and iPhone 14 Pro Max has been severely reduced to the point where we're seeing shipment delays into mid-December at this point for all Pro model configurations in any color, storage capacity, size. If you go on the Apple online store, supply is starting to dwindle at some of Apple's retail stores around the world, and it's become dire enough that Apple needed to put out a statement indicating this. What that means to me is probably you're going to see an impact on their Q1 numbers when those get announced at the end of January. So clearly not good news in terms of supply. Now, separately, as Debbie and Takashi, as you mentioned, reported, there is a demand issue impacting the non-Pro iPhone. So you remember 4 new iPhone 14s, as there were the last 2 generations for the 13 and 12. There's the base iPhone 14 and then the iPhone 14 Plus, which is the base model configuration, but with a bigger size, that 6.7-inch display. Those two models have had a bit of a demand issue from the very early innings of this launch. That's why you've seen a reduction of about 3 million units, going from 90 million units ordered to 87 million units ordered through the balance of 2022.
Mark, on the supply side, what does Apple say about its intermediate and long-term reliance on Foxconn? In reality, given their scale, can they really move some of that production out of China, whether it's somewhere else in Asia or maybe even onshoring it a bit in the U.S.?
So they've said nothing about onshoring to the U.S. in terms of iPhones, in terms of better diversification. Now, this is a very simplistic explanation for the situation. So, forgive me for how much I'm simplifying this because the reality is much more complex. So you have your supply chain. You have two main components. You have what's known as FATP, which is final assembly, test, and packaging. That's what Foxconn does. I'll explain that in more detail in a minute. Then you have the underlying supply chain. That's all the component sourcing, right? In terms of components, manufacturing individual parts, cameras, processors, batteries, displays, Apple has begun to diversify that quite a bit, right? Now, in terms of FATP, that final assembly, when you think of Foxconn, when you think of manufacturing, this is what you think of. Millions of iPhones coming down the line, being packaged and shipped to consumers. That's what Foxconn does. They assemble the phones, they put all the components together. Because of the fit and finish required for the iPhone 14 Pro and iPhone 14 Pro Max, because of the intricacy with those products, Apple really needs to rely on a tried and true manufacturer. And that really only comes down to Foxconn in China, in that specific region, at those specific factories. Diversifying away from that for that specific need, that's going to be difficult. That's going to take several years if Apple ultimately ever does it. I will say, second time this year where you've had major shipment delays because of COVID-related or other lockdowns in China. This happened with the MacBook Air. New MacBook Air was announced in early June, didn't go on sale until the end of July, about 2 months of lost MacBook Air sales. Ultimately, Apple made that up in the following quarter, so we're probably going to see something similar here. Q1, lower than expected because of this iPhone issue. However, you'll see a higher than expected Q2 as sales rebound.
So for someone, we've just got about 40 seconds, Mark. So how do you look at this longer term, what it means for the company, whether it's in terms of maybe shifting the supply chain if it can, or what it means for kind of the overall stock and financial story for this company?
In terms of the underlying supply chain component sourcing, Apple will continue to diversify. They've taken small steps to diversify the final assembly, testing, and shipping for less intricate products. Apple Watch, some Macs. You've seen some sites go up in Malaysia, Vietnam, India. I think you're going to see more of that, and gradually, hopefully for the company and the shareholders, Apple will be able to better diversify for its more high-end products as well in terms of where that final output happens.
Bottom line, 5 seconds, it's still selling a lot of stuff, right?
They're still selling a lot of products, but you're going to see a little bit of delay on shipments here if you're wanting to get an iPhone 14 before Christmas.
All right, great stuff as always. A lot of moving parts and just putting it together so well. Mark Kerman, as you always do, technology reporter at Bloomberg News from our LA bureau.
Yeah, good stuff. I mean, I'll delay. I'm not going to buy a 14.
All right, let's go back to world and national news for that Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Both President Biden and his predecessor, Donald Trump, are hoping to provide their party some late boosts on this, the last full day of campaigning before the midterm elections. President Biden is holding a Monday evening rally in Maryland as Democrats eye retaking its governorship. Trump is set to stage his own event in Ohio, where he'll be pushing voters to support his hand-picked Senate candidate, J.D. Vance. Well, on this Election Day Eve, polls show Democrats closing the gap in voter enthusiasm, with many races remaining highly competitive. We get the latest numbers from Bloomberg's Amy Morris.
Registered Democrats and Republicans expressing high interest in the midterms are tied at 73% in the latest NBC News poll, erasing Republicans' 9 percentage point edge in October. But a Washington Post ABC News poll suggests Republicans are more certain about actually casting their ballots. That poll also indicates Republicans are positioned to take control of the House, and both surveys show Republicans have the edge on economic concerns and that President Biden's popularity remains low. In Washington, I'm Amy Morris, Bloomberg Radio.
This year's midterm elections may be the most expensive ever. A new analysis from the nonpartisan watchdog Open Secrets estimates the 2022 elections are expected to cost more than $16.7 billion. That includes spending in both federal and state races. College basketball officially makes its return today. Over 100 games are being played, with many major programs set to start their season. The defending national champs, the Kansas Jayhawks, will face off with Omaha tonight. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Nancy Lyons, thank you so much. You are listening and watching Bloomberg Business Week live in our Bloomberg Interactive Broker Studio. We are also, of course, on YouTube and streaming on Bloomberg Quick Take. So one story that is top when it comes to the big bank financial menu here, this has to do with Wells Fargo. This is a company that has been in the news for many, many years for some of its wrongdoings, and now it is under pressure from the Consumer Financial Protection Bureau to pay more than $1 billion to settle a series of investigations into mistreatment of customers. It's a deal that would shatter the agency's previous record, also, which happens to be with Wells Fargo. This is a Bloomberg exclusive.
Yeah, it's interesting stuff. The latest talks with the CFPB span automobile lending, consumer deposit accounts, and mortgage lending. Wells Fargo said in a filing this week. I got a checking account with Wells Fargo. Had my mortgage back when they owned it. They originated my mortgage.
Remember, it was like Wells Fargo and Wachovia, like they all kind of came together.
Yeah, but these guys who prior to, were so under the radar for so long, post financial crisis, it just seems like once a year there's something major coming out of this, and it's been several management teams in there to send in to clean it up.
Yeah,
but I don't know what it is, but I guess what I remember back from the original reporting was, they have a very aggressive sales culture within a lot of part of the banks, the retail part, to really cross-sell, upsell, those types of things, which in and of themselves aren't bad. It's just a question of how you actually do it.
Well, and pressure on Wells Fargo individuals to open up accounts. And back in 2016, the revelation that came out was that the bank opened millions of bogus accounts. And then there were other problems across business lines. And as you said, Paul, ousters of 2 CEOs, number of costly penalties, including the Fed's decision to cap the bank's assets. Charlie Scharf was brought in from BNY Mellon, an outsider. And part of some of the criticism for Wells Fargo is that they were so, inside management constantly, and nobody from the outside maybe potentially looking into to take a look at what was going on and how things were run. Anyway, this story, you can find it among the most read on the Bloomberg terminal. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World headquarters, I'm Charlie Pellet. Stocks on track for a second day of gains ahead of midterm elections tomorrow. Morgan Stanley's Mike Wilson says polls pointing to Republicans winning at least one chamber of Congress provide a potential catalyst for lower bond yields and higher equity prices. Right now, the Dow's up 423 points, up 1.3%. The S&P is up 35, up 0.9%. NASDAQ is up 95, up by 0.9%. 10-year yield 4.20%, with a 2-year right now yielding 4.71%. Gold down $6 the ounce, down 0.4%, $16.75. West Texas Intermediate crude down 0.6%, $92.01 a barrel. So again, recapping, stocks higher. The Dow, the S&P, NASDAQ all rallying. Among the names after the close of trading today, we'll be hearing from Lyft, and right now Lyft shares are advancing by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Paul Sweeney here on Bloomberg Business Week. Now, remember all those Russian super yachts being seized because of sanctions against the owners of the yachts? You know, we're talking about those Russian oligarchs following the Russian invasion of Ukraine. Well, yeah, kind of good, right? A good move, taking that property, certainly making a point. But super yachts require a lot of care, and that care costs millions of dollars a year. And that is a story that we get in the new issue of Bloomberg Business Week. It's going to be out later this week. It's also the Bloomberg Big Take, because what's really interesting is who's actually paying for all of this. Let's get to it with Bloomberg Business Week editor Joel Weber. He's in our Bloomberg Interactive Brokers studio. The story by Bloomberg News financial investigation senior writer Stephanie Baker. She is via Zoom in London. This is like a delicious story.
Oh, yeah. Super yachts?
Yes.
Can't not make those fun, right? And, you know, what's really fascinating about this story, you could attempt to write this off as an oligarch story, although, as Stephanie will point out, oligarch is not the preferred word, because not all of these individuals are like textbook definitions of oligarchs, but they are, by and large, very rich Russians who don't directly own these boats. And so that gets into a really complicated topic that Stephanie dives into in the story. But more importantly, you know, there was this thing that happened that basically the moment that the war between Russia and Ukraine happened, these yachts almost had like targets on them as countries like the U.S. and European nations went after them. And so there's more than a few that have been basically confiscated. And Stephanie, who's paying for those?
Well, it depends on where they are. In the U.S. and Italy, it is taxpayers that are footing the bill for maintaining these super yachts. And it's not cheap to keep a super yacht, even in a port. It costs millions of dollars to keep these things staffed with crew to make sure that they are safe, you know, in case of accidents, fuel spills, fires. You know, the systems need to be run. It's not really a case of, you know, turning off the lights and locking the door and leaving it until the war in Ukraine is over. These things require a huge amount of time, effort, and money to keep in port and to make sure that they don't degrade in value, because at least in the case of the U.S., the goal of the U.S. government is for them to sell eventually some of these seized super yachts and then perhaps recoup the costs that they have shelled out on maintaining them.
Stephanie, I guess I've always learned the rule, and you'll be surprised to know that I'm not a super yacht owner, but the rule of thumb is 10% of the purchase price is your annual cost to maintain this thing, whether it's a yacht or a plane. So my question is, if I were the U.S. government, why don't they just turn around and sell these things?
Well, it's not so simple. They need to go through a complicated process called forfeiture, whereby they need to prove before a judge that this yacht has been either purchased with or involved in a crime. So unless there is a change of legislation to speed up this process, and there is legislation before Congress right now that would give President Biden emergency powers that would help speed this up and enable the proceeds of any sale to go to Ukraine. But short of that, it has to go through a legal process. And as Joel alluded to, and it's not clear who the owners are. It's not a straightforward case of, oligarch X owns yacht Y. It's the Russian billionaires tend to use very complicated shell companies. They have a tendency, and I'm speaking generally here, to have unwritten agreements to have others hold assets on their behalf. So establishing ownership requires actually not who is the owner on paper, but who is actually controlling the asset, who is using it, who is making decisions about it. One forfeiture expert compared it to the assets of a drug lord. U.S. government goes in and seizes the mansion of a drug lord, but in many cases, it's not the drug lord that owns the property on paper; it's his girlfriend.
I love it.
So they need to go through this process of establishing who is actually the owner, and it's not such a straightforward issue.
Okay, so the story opens with some reporting about the Amadea, which is a super yacht that is parked in San Diego. I thought how the U.S. got it was a great way to start the story. Can you put us on the front lines of how that went down?
Yes, so Amadea is a $325 million super yacht that sailed on the day that Russia invaded Ukraine from St. Martin in the Caribbean to Fiji, where it was frozen by Fiji authorities at the request of the U.S. government. And what proceeded was several weeks of legal wrangling until a court in Fiji approved the U.S. request to seize it. The U.S. Marshal Service turned around, hired a company to sail it to U.S. waters, where it's been sitting in the port of San Diego since June.
I want that job, by the way. Like, can you go to Fiji and get this super yacht and tow it to the U.S.?
Have you not seen Below Decks?
Yeah,
I mean, it can happen. Right. It can happen. Anyway, go ahead.
But in the process, they grilled many crew members as part of this process of establishing who was really using this yacht, who was controlling it, who was directing it, and hauled various crew members, including the captains, aside. One in L.A. airport, the other captain hauled aside in an air-conditioned shipping container in Fiji and questioned them for hours to try to establish, who was really using it. So it shows the extent that the U.S. government has gone to really go after and chase down the assets of sanctioned Russians, many of whom were actually sanctioned in 2018, and the U.S. government did very little to enforce those sanctions.
Okay, Stephanie, you got to go to a few rarefied places, even step on some boats that are in this caliber. I shouldn't even call them boats; they're super yachts. What's it like?
It's incredible, actually. It's mind-boggling. I did go on one of the biggest, most luxurious super yachts. Did not feature in my story. Owned by a German billionaire. I saw it at the Monaco Yacht Show. It was bobbing off anchored off the port of Monaco in not great weather. I felt a bit ill by the end of it, but it was just astonishing. I mean, these are floating mansions, of the most opulent wealth. I mean, hand-painted bathrooms, artwork, pools, curved bars, spas. These things are, classic sort of over-the-top wealth. And, they're owned not just by Russian billionaires, right? There are billionaires all around the world who own these things, and it has become a status symbol to have them.
Yeah. Unbelievable, and a great read because you get into so many details. Stephanie Baker, thank you so much. Financial Investigations Senior Writer at Bloomberg News. Joel Weber, the editor of Bloomberg Business Week. All right, you are listening to and watching Bloomberg Business Week on this Monday, November 7th. Carol Massar along with Paul Sweeney. And just looking at the markets, Paul, we continue to trend just kind of rolling over our best levels of the session. The Dow Jones Industrial Average really the outperformer, but certainly a lot more green than we saw earlier in the session.
Yeah, exactly. And there's a lot to digest this week, as there typically is. It seems like we have obviously the midterm elections tomorrow, although that may drag out several days, and then CPI data on Thursday. Still got some of these earnings coming out. We have Walt Disney, Mickey Mouse will be out after the close tomorrow, so we'll pay attention to that. And then, of course, the retailers. We need to hear from the retailers over the next week and a half, and we'll get a much better sense on how the consumer's doing.
No, that's a really good point, right? Like these are little nuggets that give us kind of a fuller picture of where the economy is. The consumer's so important to the U.S. economy. Can they continue spending? It's been pretty remarkable how much they have held up. I guess many would point to, well, it's a pretty strong job market, and that ultimately determines whether or not you feel confident enough to go out and spend. Although we've seen slowdowns in the housing market, and that has a, dare I say, trickle-down effect, trickle-up effect in terms of spending on a lot of different things, right, to furnish your homes. In terms of today's trade, pretty broad-based in terms of the buying. At the top, communication services and energy, if I look at some of the top-performing groups and major industry groups in the S&P 500, there are 11. Bottom of the pack, utilities, right, and that's considered somewhat of a safer play, if you will.
Yeah, exactly. So let's go to David Weston. He has a conversation as we approach these midterms.
Madam Congresswoman, thank you so much for being with us. Let me ask you the most difficult question maybe. You represent the 7th congressional district there. How does it feel to be the district that everyone agrees is the bellwether for these elections?
I'm used to being the bellwether. Everybody counted us as the bellwether for whether or not we were going to flip the House in 18, hold the House in 20, and so once again, we continue to be the bellwether. I guess it's an exciting place to be, and I'm glad we're going to win it, because hopefully that will be a nice beginning to that bellwether evening.
So you've had the reputation of being a moderate Democrat from the beginning, from 2018, and now you have some interesting endorsements, actually, you've collected, including from Liz Cheney, a Republican congresswoman, as well as from the Chamber of Commerce. Tell us about those endorsements and what they tell you and the voters about your candidacy.
Absolutely. So I've been working hard for the voters and the constituents of Virginia 7 since I was first elected in 2018. And Congresswoman Cheney's endorsement, I think, speaks to the fact that I'm always willing to work across the aisle to get things done, and that I will, on principle, always stand up for the Constitution, certainly as we have witnessed her doing. The very same. And with the U.S. Chamber, they endorsed me in 2020 and again in 2022 because I have been focused on issues that matter to constituents. And I've also been, fully cognizant of the fact that helping our economy, either under normal times or certainly throughout COVID, and then looking towards the future with particularly our infrastructure bill, has been good work I've been doing on behalf of the constituents, but also really important to small businesses and our economy, both locally and nationally.
Congresswoman, tell us about those issues. In your district, which of the issues are most important? Because we're seeing a lot of polling right now that some of the issues that matter to a lot of voters across the country are not necessarily high up for Democrats. Where are you in your district on what's most important?
Well, so I was just out knocking doors, and it's something that I routinely do across the district or when I'm at events. My first question is always, what issue is most important to you? And what I have found is that everybody has a different answer. But really the overarching theme is that people have concerns. And for some people, it's the concern when they go to the pharmacy counter or the grocery store, the cost of living, the prices. For some people, it's the potential loss of freedoms with the Dobbs decision or concerns related to voting rights. For some people, it's they want to see continued progress on things like good governance, investing in infrastructure, bringing businesses back home through the CHIPS and Science Act. I have a lot of veterans and active duty service members in our district. For them, it's also issues related to national security and their service. And really, the overarching theme that there's kind of uncertainty and at times worry gets back to the theme of we need people who are focused on solving problems and getting at the issues that matter most to voters. And again, because that sometimes is different things, making sure we're attuned to all of the issues and working to solve as we can every problem.
Congresswoman, in polling across the country, maybe it's different in your district, but across the country, the economy and inflation rank right up at the top, and everything else falls behind that. When you go out and talk about the economy and inflation, can you run with the Democratic leadership in Washington, or do you have to run against them?
Neither. I run on my own record. And, you know, I have a record when it comes to issues related to inflation and supply chain disruptions. You know, I have been doing work on trying to recruit and retain additional truck drivers to the industry because one of the challenges within our larger supply chain difficulties have been related to truck driver shortages. I led legislation to lower the cost of food and fuel by getting, going after anti-competitive practices within the meatpacking industry, and also an effort to continue to have access to year-round E15 so that we can deal with and contend with refinery capacity shortages here in the United States. And so I have a record of recognizing that issues such as inflation are impacting families across the district. I have 3 children. I certainly understand this personally, but the problem wasn't created in a day. It won't be solved in a day, and we need people who are focused at getting at all of the contributing elements. And I have a record of having done that and continuing to do that.
So go back to some of the things that could be done by Congress. Let's assume you get reelected. Let's assume even that the Democrats keep majority. What could Congress do in the short term to address inflation?
Well, so, you know, one of the things that we did in the law that we recently passed, and this is to recognize the impact of inflation on families, on individuals, that any multinational pharmaceutical company that raises the cost of their prescription drugs outpacing inflation will have to pay a fine. The importance of this comes twofold. One, to ensure that we don't see kind of runaway profits with these multinational pharmaceutical companies while people are struggling. And certainly I hear these stories across Virginia. The fine goes back to Medicare. That's a great benefit, certainly to anyone on Medicare and to the U.S. taxpayer. And that's a disincentive for pharmaceutical companies to do that, which of course benefits anyone who relies on medication. I do a lot of work. I represent a district while population density is mostly suburban and urban. Our land mass is majority rural and agricultural. So I do a lot of work related to the consolidation within the meatpacking industry that not only impacts people at the grocery store, because we're seeing record profits among the top 4 meat packers, but it also really impacts our local producers, particularly in Virginia, where we have a lot of family producers that are seeing their input costs go up, and they are just not able to sell their product at the same price and make a living. And so getting at those anti-competitive practices that cut out family farmers like those I represent is important, not just to the consumer, but also to the producers I represent.
Congresswoman, finally, as I say, you ran as what is perceived as a moderate Democrat back in 2018. You now have a Republican in Glenn Youngkin, who's the governor. What do you say to your constituents that perhaps voted for you in 2018 and then voted for Glenn Youngkin? What can they do? Can they vote for you again?
I mean, they did in 18 and they did in 20. There were a lot of actually crossover ballot casters in 2020, people who voted for the former president and voted for me. My record is being hyper responsive to my constituents, and certainly my role as a congressperson is very different from the role of the governor or the presidency. And so, you know, it's an issue of how I'm serving the community. People know I have a background in public service, first as a federal agent working narcotics and money laundering cases, then as a CIA case officer. My whole life experience has been trying to answer tough questions and get at some of the biggest problems facing us from a national security perspective. But now I also have a record of being present in communities and ensuring top-notch constituent service. Our constituent services are being delivered and being responsive with legislation directly to the needs. So, you know, these roles are different, which is why I think that, you know, people are considering who to vote for differently. And so, yes, we did see changes and shifts in people who they vote for these different roles. And who people voted for in 2021 has no bearing on whether they vote for me.
Congressman, I really appreciate you taking time. I know it's a very busy time for you. That is Democratic Congresswoman Abigail Spanberger from Virginia. Back to you.
All right, our thanks to
listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's get an update on world and national news. It's back to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. It's the last full day of campaigning before Election Day. President Biden posted this on Twitter this morning.
A quick reminder, vote. Go to iwillvote.com to find out where and how.
The president and former President Barack Obama on that video. About 40 million Americans have already cast mail-in and absentee ballots. The president and former President Donald Trump will both be holding pre-election rallies tonight. The federal agency that worked to ensure election integrity in the 2020 presidential vote is taking a more hands-off approach to this year's midterm.
The Cybersecurity and Infrastructure Security Agency says it will not flag any potential election disinformation on Twitter or other social media. Instead, a spokesman tells the Washington Post state and local officials can direct any potential misinformation on the platforms to the nonprofit Center for Internet Security, which can then pass it along to the social media companies. The comments come after The Intercept reported last week on communications between the government and tech companies that led to criticism from both conservatives and civil rights groups. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 studios in Washington, D.C. All right, folks, we did want to mention a story on the Bloomberg. It has to do with Manhattan prosecutors saying that they've seized almost $3.4 billion in Bitcoin from a property developer who scammed the dark web marketplace Silk Road over a decade ago. So, Paul, this would be now the second largest crypto seizure for the Department of Justice. According to investigators, they discovered more than 50,000 Bitcoin in the home of a Georgia resident, James Zhang, in a raid carried out in November 2021. Zhang, 32-year-old computer science graduate, was arrested and pleaded guilty to wire fraud last week.
Yeah, the raid
See,
was...
you can find Bitcoin.
You can find... First of all, when you think about the concept of Bitcoin, you're thinking, boy, this is going to lead to shenanigans. And, I guess,
Probably not.
But, and then a lot of times you think, oh, it's untraceable. So, if it, that's why they're going to want to use it in crime. But it turns out it is traceable.
This is what's kind of wild. This is right, and we're increasingly learning about that. You think you can hide from police, regulators, the feds, but apparently you cannot. All right, we kind of wanted to get to a funnier, softer, different kind of story. Can we talk Peloton?
Yeah, absolutely. I was at the Peloton studios this Saturday in Manhattan.
Was there a rug under the Peloton
There was
bike?
not a rug under the Peloton.
Oh, come on.
But the new founders here, I guess the founder, including some of his top executives, I guess the founder is Mr. Foley, right?
John Foley,
John Foley, starting a startup rug company where you can design, I guess, kind of your own rug, and at a cost that's roughly the same as you'd find in a standard rug store. So I guess there's a demand for customized rugs, and you'll get like immediate delivery and all that kind of cool stuff.
Connect the dots here. It does include John Foley.
Yep.
We've talked to him. I've talked to him a couple times. Peloton's former chief legal officer is also the ex-chief technology officer, joining Foley to launch Ernesta, which will let people, as you said, Paul, buy custom designed and cut rugs at roughly the same price as a standard store-bought product, I can't talk, with fast delivery. So they got a $25 million Series A funding round.
Good for them. All right.
Yeah.
It's a thing.
It is a thing now. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. A rally underway on Wall Street. We've got 43 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, and the Russell 2000 all advancing. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks adding to their gains with the Dow currently up 472 points. S&P's gained 40 and NASDAQ is higher by 106. The U.S. 10-year yield at 4.21%. Gold is down 5. Oil is trading in the red, and Bitcoin is down by 1.3%. Among the main 11 S&P sectors, only utilities and consumer discretionary were in the red. And leaders to the upside in the Dow, Walgreens, Boeing, and Salesforce, while Nike fell 2.6% and led to the downside. After earnings, Palantir fell as much as 13%. And in deal news, Ritchie Brothers to buy IAA for about $7.3 billion. Wrapping things up, Lyft reports after the bell. Live from the first breaking news desk on Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, thank you. We appreciate that. You are listening and watching Bloomberg Business Week on this Monday. Carol Massar, Paul Sweeney here in our Interactive Broker studio. You know, I feel like, Paul, when it comes to China specifically, you see some enthusiasm and then you see it back off depending on whether or not China is getting away from its COVID-0 policy. It seems like it's not, though.
It seems like it's not. And, you know, you wonder how long can this go on? You could argue that it's an indefinite loop. Unless they get a vaccine somewhere, somehow, this is going to continue.
Right. We heard our own Mark Gurman talk about it in terms of iPhone production. Let's see what David Riedel has to say about it. Back with us, delighted to have with him for another gut check when it comes to Asia, emerging, and China specifically. David Riedel is president and founder of Riedel Research Group. He joins us on the phone, actually via Zoom, in San Francisco. David, how are you?
Very well, Carol. How are you?
Doing okay, doing okay. So where are we when we look at China specifically? It does feel like we go back and forth. We're still kind of reeling a little bit off of, what was it now, 2 weeks ago, when President Xi kind of laid it out for us in terms of, it felt like the party politics trumping all. Where are we, though, in terms of how you look at China specifically?
Yeah, I was really hoping that coming out of those important political meetings a couple of weeks ago, Xi would have a more moderate approach to the zero COVID policy. I think it's really starting to wear on the population there, and it's certainly having a big negative impact on the economy. But they're really sort of doubling down on it. Beijing was quoted overnight as saying that their approach has been right, it's been cost effective, it's been effective, and it looks like it's here to stay, at least for the foreseeable future.
David, now that we have Mr. Xi in for another 5 years at least, is China, I mean, the rhetoric I kind of noticed coming out of the meeting, I kind of walked away thinking, boy, if I'm a CEO with lots of assets in China, I think I got to write them down to zero. I mean, can you do business? Can anyone do sizable business in China?
You know, it's impossible to say that you refuse to trade with the second largest economy in the world. You know, very fast growing middle class, very fast growing consumer class. China cannot simply be ignored. But from an equity investor point of view, it's hard to make the argument that you would be going into China right now. We had a big rally last week on this unverified rumor of an unsigned WeChat message that indicated that they were going to ease up on zero COVID. And of course, that turned out to not be the case. There were similar rumors a few weeks ago that Xi was under house arrest, and it was all this stuff turned out to be not the case. So I think people are looking for some sort of rebound in China. And I'm afraid I don't see it really coming this year or maybe into next. Well, so I think equity investors need to sit on the side for now.
Well, and what is your kind of net when it comes to it, bottom line? I mean, our Andy Brown used to be editorial director for Bloomberg New Economy, and he is now really just looking at the space from an outside company. But what's interesting is I said to him, you know, what's the mission here? I mean, are they kind of really giving up their economy going forward? And he's like, no, you know, President Xi isn't going to let the Chinese economy fall off a cliff. Do you agree with that? That ultimately he's going to make sure that there's growth and that there's momentum?
there does need to be growth. There needs to be food on the table. There needs to be job security in China, but for the Chinese. So I think the difference is he's not going to disappoint the Chinese people, but he might disappoint foreign investors. I would be very wary of being in some of these US-listed Chinese names where I feel like the Chinese have changed their tune a little bit. They've secured the capital they needed from international markets to grow certain parts of their economy, and I worry they're going to prioritize Chinese citizens over foreign investors. That's what concerns me.
And, I guess my question, again, going back to some of the rhetoric coming out of that meeting in China, is it seems like Mr. Xi really does want to focus almost exclusively on China and China itself. I'm not sure if I even have somebody who's going to pick up the phone on the other side if I want to trade with them. Is that, I can't imagine that's kind of where they want to go over the next 10 to 20 years.
Well, I think that they've seen with the Russia-Ukraine situation the benefits of Russia's quote-unquote fortress economy, where they had really sort of ring-fenced themselves to the extent that they could in advance of sanctions that they were expecting. I continue to believe that China will take a run at Taiwan at some point. The U.S. State Department has said they expect that to happen this decade. I'm not sure it's that soon, but I think it's probably in our lifetimes. And I think that China is trying to get themselves ready for the inevitable sanctions and pressure that would come as a result of some major move against Taiwan. So I think they're focusing on China as their top three priorities are China, China, and China. I think that's where they're focusing.
David, we have about a minute, and then we're going to take a break and come back and talk some more. But I do wonder, when you look around the world at the Asia-Pac region, is there another area of the world that you think we should be paying more attention to than China potentially when it comes to tensions or concerns?
Well, I think that I'm very surprised that people aren't paying attention to the North Korean tensions that have risen in the last few weeks over the weekend and late last week. A lot of missile tests, a lot of fighter jets scrambled, both U.S., South Korean, and North Korean warplanes in the air. I'm a little surprised this Monday we're not hearing more about that. But I think there are some good opportunities in other parts of Asia. We continue to recommend Indonesia as a very strong, well-positioned regional hub. They had nearly 6% GDP growth on their last measure, and I think that Indonesia is one we're going to be talking about for a while.
All right, sit tight for a second, David. We're going to do a little bit of news, and then we're going to come back. We're going to continue our conversation with David Riedel. He's president and founder of Riedel Research Group, with us via Zoom in San Francisco. And folks, we've got about 36 minutes left in today's trading session, and we are hovering near our best levels of the day. S&P 500, a 1% gain. Dow Jones Industrial Average up about almost 1.5%, and the NASDAQ also looking at a 1% move to the upside, up about 105 points. Got some earnings too after the closing bell. We'll come back with David, though, in just a moment, right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Massar, Paul Sweeney. We're going to get back to David Riedel. He's got some thoughts on when you are looking at the Asian region, where you might want to put some investment dollars.
Yeah, and it's interesting. If China is not necessarily the place to go, that's such a big part of the MSCI, index. Where do you go?
Exactly. So we'll get back to him in just a moment. In the meantime, we got to check in with Charlie Pellet. Look at that trading day, and it looks like we're taking another leg up here.
Indeed. We got 20 minutes to go, Carol. The Dow, the S&P, NASDAQ, familiar theme here. Best level of the day. No late day fizzle. We have got the S&P now up by 42 points. That is a gain right now of 1.1%. We'll keep you covered on how stocks are doing. The Dow's up 490 right now, up 1.5%. NASDAQ up by 1.1%, now up 110 points. The NASDAQ 100 index full of big tech names up by 1.3%. And Russell 2000, part of a broad-based rally today, it is gaining by 0.7%. All of this ahead of midterm elections tomorrow amid questions about what the outcome of congressional and Senate races could mean for American energy policy. Regina Mayer is Global Head of Energy at KPMG.
But the mood in Central Texas is, still pretty mixed, right? We're achieving great financial results in large part because we're benefiting from higher commodity prices. But the days of drill, baby, drill, and we're going to frack until the cows come home are long behind us. And Wall Street is really what's driving the oil patch, particularly in the U.S., not Washington.
And today we've got oil stocks advancing. Case in point, ExxonMobil up 1.2%. BP, its ADRs up 1.5%. Chevron also up 1.5%. EOG Resources up 2.4%. Pioneer Natural up by 0.7%. Again, recapping, the Dow, the S&P, and NASDAQ are all rallying. We have got the 10-year yielding 4.20%. The 2-year yield 4.71%. Spot gold down 0.4%, 16.75 the ounce. Regina, just talking about energy. West Texas Intermediate crude down 0.7%, 91.99 a barrel. Cannot ignore natural gas. It is rallying now by 8%, up 51 cents, 6.91 per million BTUs on nat gas. S&P up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. All right, let's bring back David Riedel. He's president and founder of the Riedel Research Group. He joins us on the Zoom from San Francisco. And David, I want to run by a pitch that I received on Friday that was kind of compelling to me. What basically the pitch is, go long India. We all know some of the growth characteristics of India, but the latest one is that China is effectively shutting itself off from outside investment. And hey, if you can't go to China, try us at India. What do you think of that one?
There's really some truth to that. India has very attractive demographics, a large young population. They do have the capacity to take on some of that manufacturing capacity that people might be looking for to move out of China. India's accomplished a lot of great things in the last few years. They're very business oriented now. They've digitized large parts of the economy. Got a lot of advances in money transfer technology and financial fintech sort of names in India. Stocks in India are expensive. You have to really accept a higher valuation. But in terms of where the world's headed, India is a good place for people to land.
Hey, David, can it completely do kind of a replacement of the relationships that currently exist with China? Or we can't necessarily think that it's something that can just be replaced so easily?
Yeah, it's pretty hard to move those very well-established supply chains out of somewhere like a China. The advantage of manufacturing in China is these large pools of labor, but also all your other suppliers are nearby. The factory for your cardboard boxes is down the street, or the packing material is in the next town over. Maybe the screens are made just in a factory nearby. The ecosystem of Chinese manufacturing is very well developed. I think any opportunities in India would be individual, smaller scale manufacturing opportunities, but still could be an important safety valve for manufacturers looking to diversify away from China.
David, you guys have folks on the ground, and Paul and I were talking kind of off air about how we're increasingly see people who were so entrenched, whether it was China, whether it was Hong Kong, moving away, physically leaving, and that says something very significant after maybe being there for decades. So what is it that you think the Bloomberg audience really needs to understand about folks? Here's what's changing, and that's not something that's likely to go back anytime soon when it comes to China specifically and or Hong Kong.
Yeah, I think that's a very important observation. China is very China-focused now. I think China feels like they have gotten from the rest of the world many of the advantages that they needed. They needed technical capability, they needed capital, they needed financial wherewithal, the ability to run large-scale banks and things like that. And they got all that. The American banking conglomerates went in there in a big way and set up these large privately run banks in China. They got the investments that they needed in Alibaba and Baidu and other companies that they listed in New York. And increasingly, you're seeing those listings move to Hong Kong or to Shanghai. So I really think you are seeing China pull back from the world stage a little bit and really focus on their domestic market, their domestic needs, and their domestic citizens. So that's what's changed. I think China is turning more inward.
Do you think the Chinese people want to turn more inward? Is there support for Xi in this evolution, I guess?
There is support for Xi. I hope he did. I worry that he might be too committed to the zero COVID policy, which can be very trying for families and for citizens and for people under a constant threat of lockdown. There's been some very high-profile cases that went viral recently of families being separated and some very, very difficult stories hearing about COVID. But they are supportive of the party and they're supportive of Xi in that he's brought relative stability, he's brought food security, he's brought jobs and opportunity over the last 10 years. So I think that they'll give him a little bit more time to prove himself. I hope he doesn't trip over this zero COVID policy, which is really not working.
Hey, David, shame on the world that did everybody miss some sign when it came to China and President Xi, or no?
No, those of us who were watching, we knew he had a strong military bent, a very nationalistic bent. His desire to really establish Xi thought as a parallel and sort of on the same level as Mao Zedong thought. He really had high aspirations for his place in Chinese history, and he's executing on that plan. I think that Westerners often don't believe politicians when they say they're going to do something, and I always caution our clients, when the Chinese say they're going to do something, believe them, because they do tend to do it.
Always appreciate your time. I know we didn't get to some of the names that you are looking at, but hopefully we can do that again real soon with you. And we do appreciate the big picture talk because I think it's just one of our we talk about pivots. It certainly feels like this is a big pivot of our time. David, thank you so much. Be well. David Riedel, president and founder of Riedel Research Group, joining us via Zoom in San Francisco. And we've got just about 20 minutes left in today's trading session, holding on to some pretty substantial gains, just rolling over, but still up about 1.3% on the Dow and up about 0.9% on both the S&P and the NASDAQ. Let's go to World and National News. Nancy Lyons, she's in D.C. Hey, Nance.
Thanks, Carol. President Biden will be traveling to Maryland later today to campaign for the Democratic candidate running for governor there, Wes Moore. It's Biden's last-minute pitch before the midterms, and Democrats may need a nudge because a new Wall Street Journal poll finds Republicans may be making inroads among Black and Latino voters. It finds about 17% of Black voters would pick a Republican over a Democrat for Congress. That's up from 8% in 2018. And Democrats hold a 5% advantage among Latino voters. That's down from 11% in August. Bloomberg's Anne-Marie Hordern with more.
The issue for these groups, Black voters, Latino voters, is the fact that inflation is really starting to become front and center for them, especially in a place like Nevada, right? It's a huge industry that supports Las Vegas. These are very much so middle-class voters.
Again, Bloomberg's Anne-Marie Hordern. More than 100 world leaders are in Sharm el-Sheikh for the UN's annual Climate Change Summit. They're attempting to maintain momentum in the battle to curb planet-warming emissions. Delegates are already aiming harsh criticism at each other over issues ranging from climate reparations to funding for mitigation. Well, the Powerball jackpot is now up to $1.9 billion. That's the largest ever. And there are plenty of folks hoping for that big prize.
Now I'm going to win. I feel very confident about that.
This will be the winning ticket. Thank God.
put it in the bank. I'm going to save it. I don't know what I'm going to start with.
I think that's amazing, and I hope someone really deserving gets it.
The chances of winning, 1 in 292 million. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy, thank you so much. Not to be a bummer or Debbie Downer, but apparently the $1.9 billion, you only get that if you take the annuity.
Oh, really?
Yeah.
So I wonder what the lump sum is.
So let's see. The lump sum, I heard, it's so funny. My family, I was with a bunch of family members. They're like, this was before the Saturday win didn't happen.
Yep.
But it was something like I think it was 1.3, 1.4. So I don't know where it was.
It's still not bad.
But no. They were saying that after that, you only get like $700 million.
Taxes.
If you take the lump. Yeah. It's
taxes.
like kind of crazy. Wait, the upfront cash option
Okay.
for the current jackpot, this drawing is $929 million.
Nice.
But isn't that crazy?
Yeah.
It's 1.9. You're losing $1 million, right?
Taxman cometh.
I mean, come on.
Yep, absolutely.
What's up with that?
Exactly.
All right. Listen, I got to tell you, the Powerball story, not among the most read on the Bloomberg terminal. This next story is the most read story in the past 8 hours on the Bloomberg.
Apparently, the chief financial officer of Tyson's Foods was arrested Sunday for public intoxication and criminal trespassing. John Tyson, he's 32.
Nothing alleged about his being arrested, though.
No. He's 32.
Yep.
Tyson, you'll note the name, was booked early Sunday, according to the Washington County, Arkansas Sheriff's Department. He was released later that day. Now, according to a report on KNWA Fox 24, Tyson was found asleep Sunday morning in a woman's bed in her home. She didn't know who he was and called the police.
Houston,
and oh, by the way, he's the fourth generation. He's a CFO.
Yep.
He became CFO October 2nd. He is the son of the board chairman, John H. Tyson, and is a fourth-generation member of the Tyson family.
It comes just a week before John R. Tyson was likely to address investors for the first time as CFO during earnings, which are coming on November 14th. This could be a rough Thanksgiving.
And here's my favorite sentence in the story. Tyson Foods is the food industry's second company to see an executive arrested in the past few months. Beyond Meat suspended its chief operating officer, who had previously spent 3 decades at Tyson, in September after he allegedly bit a man's nose.
So there's actually a category for CFOs getting in trouble.
Yeah, I guess.
Well, I'm just saying.
Tyson alumni.
2 makes a category.
Exactly.
This is our most read story in the Bloomberg for all day. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Stocks very close to session highs. Right to the numbers, they speak for themselves. So the S&P up 36 right now, a gain of 1%. The Dow up 419, up 1.3%. NASDAQ up 95, higher by 0.9%. 10-year yield 4.20%, with the 2-year yielding 4.71%. West Texas Intermediate crude right now is down 0.7%. 91.92 a barrel. Natural gas pairing its advance up now by 3.1%, 6.59 per million BTUs. Spot gold down 0.4%, 16.74 the ounce, while Bitcoin is down 1.5%, 20,805 right now on Bitcoin. Bottom line here, stocks on track for a second day of gains ahead of midterm elections tomorrow. Morgan Stanley's Mike Wilson says polls pointing to Republicans winning at least one chamber of Congress provide a potential catalyst for lower bond yields and higher equity prices. Recapping, 10-year yield 4.20%, the S&P up 38, a gain right now of 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. All right, folks, it is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Britain's new Prime Minister Rishi Sunak got a quick sign of trouble ahead when a quarrel over trade rules between Northern Ireland, Great Britain, and the Republic of Ireland flared anew. When the UK left the European Union, it was understood that an open border between Northern Ireland and the Republic was essential. But this meant Brexit would require an economic border in the Irish Sea. Britain agreed to a protocol making that stipulation in 2020, but when protests in the north shut down the region's power-sharing assembly, the Tories moved to unilaterally cancel the protocol. A trade war between the UK and the EU is now a distinct possibility. The world needs Britain and the EU to be allies, not rivals. If Sunak wants to make a difference, a reset of UK-EU relations would be a great place to start. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Carol, did you know that I'm an avid municipal bond investor?
I know, you talk about them a lot.
Yeah, I mean, I think I'm probably the biggest individual creditor to the state of New Jersey at this point. So I love talking muni bonds. Matt Miller, not so much. He tends to literally leave the studio when we have our sponsored municipal bond segment. You know, but we're going to speak to another bond person that loves the muni space, Nick Venditti, Senior Portfolio Manager on the municipal fixed income team at Allspring Global Investments, joining us on the phone from Menominee Falls, Wisconsin, home of Ann Maletti, too, my all-time fave. Hey, Nick, talk to us about your municipal bond markets. We've got a Federal Reserve that has been very clear about raising interest rates. They have been raising rates. The question about when they may pause. How's your market kind of reacted to that over the past 11 months or so?
Well, it's been tough, right? It's been tough for everyone, but we're kind of in the no pain, no gain scenario. We've felt the pain, and now it's time for the gain. Absolute yields here look very, very attractive in munis, and I would say even in a tough year, munis have outperformed just about every other asset class there is, and I think they're well poised to continue to do that over the next 6 to 9 months or so.
So talk to us about, it sounds like you're giving us some visibility, but longer term, your expectations in terms of where the economy goes, where rates go, and how that impacts, in particular, when it comes to the fixed income area.
Yeah, I mean, look, I think the Fed seems dead set on continuing down this path, but I'm less sort of sanguine on their ability to be as aggressive in the future as they have been in the recent past. We're seeing signs of economic slowdown already, right? I mean, it seems like you can't open the news without another company announcing layoffs or hiring freezes. We're seeing mortgage rates at or above 7%. We're seeing some signs that inflation is starting to turn over. And by virtue of all of those things, I think we are slowing down the economy. And ultimately, a slower economy leads to a less aggressive Fed and should provide a pretty interesting backdrop for fixed income generally.
All right, so we're going to have our Federal Reserve here raising interest rates, and the economy is slowing, as you mentioned. Talk to us about credit quality. I guess even during in the depths of the coming out of the pandemic, it seemed like the stimulus was enough to really support the municipal bond market. Is that still the case? Is Stimmy still supporting some of these credits?
Yeah, it turns out that nothing on earth says I love you like cash. And stimulus money was a direct injection of cash onto municipal balance sheets and income statements. And all of that cash has hid a lot of sins and frankly allowed these credits to, I would say, weather this storm probably better than they otherwise would have, and leaves them in a place still to this day where they look pretty fundamentally strong.
Hey, one thing I want to ask you, right? Got midterms tomorrow, and voters tomorrow will weigh on at least $66 billion of bond measures put forth by states and municipalities across the U.S., right? They're looking to finance things like new schools, climate resiliency efforts. That is more than double the $27 billion on ballots at this time last year. So it's among the highest volume of bonds up for votes since at least 2009. That's according to our own Bloomberg analysis here. So when you look at some of the issues that voters might be weighing on, is there anything of interest in particular for you?
I think generally this is a less interesting election than the prior one for obvious reasons. The big, I would say, hot button issue is the one that you addressed, which is the impact it may have on supply. So ultimately, we've been living in a municipal bond world where supply has been incredibly muted. And that has acted as sort of a buoy to the muni market, even in a year where markets have been very difficult. Ultimately, if some of this excess supply comes to fruition, I think that is a weight that investors need to be aware of, and ultimately could act as a little bit of a detriment to sort of my fixed income thesis.
Hey, Nick, I know in the municipal bond market, they kind of issue bonds, municipalities, when they need the dough, not necessarily when rates are low. So what's the visibility on new issuance in your market?
At least for the rest of the year, it looks like supply is going to remain very, very muted. And again, part of that is a direct result of all of that stimulus money. All of that cash has allowed municipalities to sort of kick the can one block further down the road. So it should remain, the backdrop should remain pretty strong from a supply perspective over the next 8 weeks or so. It'll be interesting to see how munis sort of react to this new higher rate environment and how they, come to the market and structure their debt on a go-forward basis given these new realities.
And I always like to ask about the taxable municipal bond market, because that is an oxymoron to me. The main reason, if not the only reason, I own all this New Jersey paper, because it's triple tax-free income. But talk to us about the taxable municipal space.
So the taxable muni market really became in vogue when tax-exempt munis lost the ability to advance refund their debt in the tax-exempt market. So they started tapping the taxable market pretty aggressively and still recognized economic savings. A perfect storm kind of came to fruition because all of a sudden demand for taxable munis skyrocketed as well when tax rates for institutional investors fell during the Tax Reform Act. Now, though, we're living in a world where tax-exempt munis cannot recognize economic savings. And so it'll be interesting to see whether or not the supply dynamic we've seen over the last couple of years will be able to persist on a go-forward basis. I think it's probably likely that it won't, and taxable munis will once again shrink to a fraction of the total market.
Hey, Nick, just got about 25 seconds here. So if investors are looking to put some money into the municipal bond market, where would you say or suggest that they maybe think about looking at? And just quickly.
Yeah, I would say two things. One, look, duration as a risk is certainly cheaper with rates as high as they are.
Yep.
But with the curve as funky shaped as it currently is, I would still take a little bit of a prudent stance towards duration. And similar on credit. We're entering a recession. Spreads are likely to widen.
All right, we got to run. Nick Venditti, he is at Allspring Global Investments. Time to head over to our TV colleagues for Beyond the Bell, counting you down to the close.
Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Massar, Paul Sweeney stepping in for Tim Stenovic on this Monday. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and Quick Take. And Carol, an interesting rally here in the markets. It didn't look like this was going to sustain itself a few hours ago, but a lot of conviction as we get closer to those bells.
Yeah, really good point, Romaine. And I do wonder, like, what is it that investors know? If you think about it, 2 days in a row that we're seeing some upward momentum when it comes to the equity trade, certainly when you look at the S&P 500, but overall. So you do wonder, are investors, Paul, something you and I, a theme today, gridlock, is that what they're expecting out of the midterms? And that could be good for the financial markets.
Yeah, I've heard from a lot of fund managers that gridlock is not the worst thing, that in fact the data shows that it's actually a pretty good thing for risk assets. I note here that the NASDAQ participating in today's rally, and you think back to the weaker earnings that we had over the last 10 days or so to pull down NASDAQ, at least we get a good trade today.
You think about sort of a boost that we're also getting from some of the dollar weakness we're seeing. It was Steve Englander over at SocGen on Friday and out again today with another note highlighting that you can get a dollar anywhere near $13.50 on Bloomberg Dollar. And some of that weakness, too, giving us maybe some confidence that peak dollar, peak hiking, peak hawkishness is behind us.
Yeah, we saw that interesting note out of Citigroup talking about that idea, the idea that sort of weighted to this idea that Fed policy may have actually matured or not necessarily peaked, but is getting there. And then there was that note last week out of the folks at Morgan Stanley who actually upgraded their view on EM currencies, only to neutral, but still an upgrade to say the least. The closing bells here in New York City, the Dow Jones Industrial Average going to finish the day on a high note, up roughly 1.3%. As we wait for these numbers to settle, the S&P 500 going to finish the day higher by almost 40 points, up about 1% on the day. The NASDAQ Composite higher by roughly 89 points, or about 8 to 9%. The Russell 2000, which had actually been the relative outperformer in previous rallies, only up about 0.5% here on the day. But I think a lot of folks will take that, Carol.
All right, Romaine, we're going to get into the individual groups in terms of what really outperformed. But if you look at the S&P 500, big broad picture here, you definitely saw more risk on, more broad-based buying. 370 names in the S&P 500. Actually, Taylor higher on the day, 132 lower, 1 unchanged. So investors were out there buying.
And you really saw that on the sector level as well, Carol. Take a look at where we are. And wow, this is a wild composition. I'm going to give you this. It's software and services, it's media, it's semiconductors. But energy and transportation are also rallying on the day. So you're sort of getting in everything mode today. Those are all up at least 1.25% and higher. Down on the bottom, there were a few losers today, even though relatively it was sort of a big day here for those who are rooting for the green on the screen. Real estate and utilities to the downside, and some auto components as well when you think about Tesla as well dropping on the day.
All right, I know we're awaiting some earnings, but just quickly I want to go through some of the outstanding performers, if you will. Some of the bullish trades here. Meta Platforms up about 6.5%, building on that 2% gain that got on Friday, top of the NASDAQ 100, planning to begin layoffs that will affect thousands of workers from this week. This is coming from the Wall Street Journal, and that they could come as early as Wednesday. So investors thinking that this may be a good thing in terms of cutting some of the overhead and costs, but nonetheless, that was an outperformer. Viatris, Romaine, do you know how you say this?
No, I'm not sure, but I saw the rally. I mean, it was interesting because it was actually lower in the pre-market, and then a lot of folks took a look at it and said, this is actually good, up 13%.
Yeah, exactly. It was up as much as almost 18%. Top of the S&P 500, drug maker announcing plans to divest more units and acquire 2 ophthalmology treatments and companies to reshape the company. So kind of a rejig on that one. And then WBA, we're talking about Walgreens Boots, up about 4%. Interesting, this stock up after the company raised its U.S. healthcare segment's 2025 sales goal, and that's after Village MD, in which Walgreens has a stake, said it was acquiring Summit Health City MD in a transaction valued at $8.9 billion. So a little bit of moving parts there, but nonetheless, outperformance for WBA, Paul.
Yeah, on the losing side of the equation today, hard to find some losers in such a strong tape, but we found a few. Dominion Energy, 3 Wall Street downgrades as the electricity and natural gas distributor said it is beginning a review of its business, and Wall Street's a little bit skeptical of what this company might do. Generac, you think about
and the CFO left as well, too.
Yes,
which
exactly.
is never a good sign.
Yeah, exactly. Always a warning sign. Generac. Boy, I love my Generac generator. I got it 2 weeks before Superstorm Sandy, so I was a very popular person in my neighborhood. Anyway, the company is still dealing with the fallout from some weak earnings recently. That's hurt the stock. Wall Street has been taking down price targets across the board. Today, Credit Suisse lowered its price target to $165 from $181 there, so continued fallout. And then our good friends at Tesla, the stock is still under pressure as investors feel that Elon Musk may be distracted by all the ongoing saga at Twitter. The midterm elections tomorrow, just adding fuel to the fire over at Twitter. And, I guess investors there in Elon's car company are a little bit nervous.
Let's take a look at the rates market as we wrap up this day's trading and push forward to some of the quarterly results. I know that, Carol, we're starting to already get a trickle feed from. You're up 6 to 7 basis points pretty much all the way across the curve. A 473 on that 2-year yield now definitely brings you back to the highs that we haven't seen since 2007. A deep inversion still on 2s, 10s further out, but we've been highlighting the 3-month 10-year, which had actually popped back into positive territory. And it is really a lift on that long end that is notable today, all the way across the curve, Carol.
All right, Taylor, thank you so much. Let's go to TripAdvisor. Stock's just up a hair here in the aftermarket. So third quarter adjusted EBITDA, we're talking about $115 million. The estimate, that's a beat, folks. $102.3 million was the estimate among Wall Street analysts. Third quarter revenue, $459 million versus $443.2 million. Again, outperformance. Third quarter adjusted EPS, 28 cents a share. That looks like that's a miss by about a dime. And they also talk about some of their costs. So third quarter stock-based compensation, $22 million versus an estimate of $23.5. This stock now down about 5% in the after hours. It's been on a tear, I should say, since about mid-July, Romaine.
Absolutely, and I think there's going to be a lot more focus on costs. We've heard from a lot of analysts and market strategists who basically said this isn't about growth anymore. This isn't even about profit margins per se. It's really about how companies moving forward sort of lean out if they need to. But the general sense here, at least in the markets, is that a lot of these companies need to.
They're highlighting profitability as well in that statement. I will just bring you, actually, we're getting some lift results out, so I'm going to pivot and let you digest those. The big red head on the terminal here, third quarter adjusted EBITDA, $66.2 million. Estimates had been for $63 million. And wow, look at this, fourth quarter adjusted EBITDA, they're now seeing anywhere from $80 to $100 million. Estimates had been for $91.7 million. Let's get away from the profitability and focus on sort of the actual results that we got, Romaine. Third quarter revenue, $1.05 billion, estimates for $1.06 billion, so right there on the line. Third quarter adjusted net revenue, I'm assuming that is $36.7 million, estimates for $28.1 million. You're also getting third quarter active riders, a little bit of a miss here, $20.3 million, estimates for $21.1 million. And that forward guidance, fourth quarter next revenue, right here on line, $1.15 billion to $1.17. Estimates had been for $1.16. And again, that fourth quarter adjusted EBITDA number that we got had looked like a good number.
And I think it was interesting, too, you talk about charges per mile up about 28% in the month of September. That's on a monthly basis here. So some of those price increases that we had seen apparently are sticking a little bit longer. Some other earnings also crossed crossing the wire. Real quickly, let's turn to Activision Blizzard, the video game company, coming in with 3Q adjusted EPS of 68 cents, higher than the street estimate, consensus estimate of 50 cents. Here's your guidance going forward. 4Q net bookings, they're looking at growth of about 20% year over year at a minimum, and Activision does still see that Microsoft deal closing by the end of June of 2023.
Right, it's all about those game releases, right, in terms of what kind of momentum, too, that it's providing for some of these companies. Again, Activision just up about 0.3%. Do want to mention Groupon, if I may. This one is way down from some of the highs that we saw several years ago. It is talking, though, about seeing positive free cash flow starting in the fourth quarter. Third quarter adjusted loss, though, was 68 cents a share. The estimated loss was much smaller, 30 cents a share. They're also targeting an additional $50 million of savings. Romaine, you were talking about it, and also some other cost actions by 2023. But nonetheless, let me just do another quick check on that stock. It was down about about 9, almost 10% in the after hours. So investors not necessarily impressed here.
And let's preview one of our favorite names here, the Walt Disney Company, reporting after the close tomorrow. That's always a big name to watch and get a good sense of the streaming business. Wall Street expects the company to add 9.3 million subscribers to its Disney Plus streaming service. So that's and they're going to be announcing and introducing a new advertising-driven streaming platform in the next month here. So the focus will be on streaming. I also want to take a look at ESPN. Subscribers are declining, and that's a big challenge for that business. And Shanghai Disney, can they make any money there with the country opening and closing all the time?
Quickly here, Kel, taking a look at shares of Lyft dropping about 10% in after hours. I think one of the key standouts for me is they're looking at higher active riders, rides, and drivers, but only the highest that they've had since COVID began. So we haven't really surpassed some of the pre-COVID levels just yet.
Yeah, exactly. All right, good stuff, guys. And as you said, Lyft down about 9%. All right, that's a wrap. Lots of earnings, but we will see you again, same time, same place tomorrow, Beyond the Bell, on radio, on TV, on YouTube, and on Bloomberg Quick Take. We'll catch you tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, watching some of the earnings momentum. We're kind of on the tail end, I feel like, but they're still important, like you said, Paul, earlier, retail. But Groupon also came out, as we mentioned, down about 11%. Lyft is down about 9% in the after hours. So we're seeing some pressure on some of these names. And I just want to do a quick check on TripAdvisor because I was on a plane, man. They are packed. It is down 12% here in the aftermarket.
Yeah, I think some expectations here on kind of the reopening or the continued reopening got a little bit ahead of some of these names. But like you, I was on a plane this weekend, and the plane was packed. Airports were packed. The hotel, I asked the hotel, they were fully booked. And it feels like people are out there. Of course, the key issue for a lot of these travel things is business travel.
Yeah, and cost, they're really trying to rein in some of those cost pressures. All right, back to World and National News and Nancy Lyons in D.C. Hey, Nancy.
Thanks, Carol. President Biden and former President Trump are hoping to drum up support in rallies today before tomorrow's midterms. Republicans are optimistic about winning enough seats to retake control of both the House and the Senate. Former RNC Communications Director Doug Heye tells Bloomberg Democrats have not focused on the issues concerning voters.
Republicans have been aggressive in talking about inflation and crime, and frankly, Democrats just haven't on those issues. We've seen a lot of talk about abortion, but that issue has really receded.
Former RNC Communications Director Doug Heye, Democratic strategist Matt Bennett with Third Way tells Bloomberg history is against Democrats maintaining control.
Only 3 times since the Civil War has the party in power actually done better in the House during a midterm election, and those were all extraordinary circumstances after 9/11, during the New Deal, and in 1998 when the economy was booming.
Matt Bennett says his party has not done a good job of discussing the economy and inflation. Well, in her first interview since her husband was attacked in their San Francisco home, House Speaker Nancy Pelosi is describing how she received word. She spoke about it with CNN's Anderson Cooper and says she was startled by the knock at the door in the middle of the night.
Bang, 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 bang on the door. So I run to the door, and I'm very scared. I see this Capitol Police, and they said, we have to come in to talk to you. And I'm thinking, my children, my grandchildren. I never thought it would be Paul.
Pelosi, again interviewed by CNN. Paul Pelosi is recovering at home. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. We appreciate that. All right, Carol, here's a story that, to be honest with you, I just don't see how we got here. In the most densely populated corner of the United States, temperatures are about to drop after a stretch of unusually warm weather, okay, and the signs of a winter crisis are already multiplying. Heating oil delivered to New York is the priciest ever. Retailers in Connecticut are rationing it to prevent panic buying. New England stockpiles of diesel and heating oil, the same product, but it's taxed differently, are a third of normal levels. Natural gas inventories are also below average. So we've got ourselves some varying levels of kind of an energy, I don't know, I'm not sure it's a crisis, but it's certainly an emergency here. And you just don't think, like when I think of the energy crisis, I think of Europe and maybe even the UK who's having some troubles getting the deliveries. But we've got it here in the Northeast U.S.
Well, this story happens to be one of the most read on the Bloomberg terminal today. And what's interesting is when we talk about the pushback against globalization, we're not maybe increasingly maybe less connected. Well, folks, we are connected because that global supply crunch that we're talking about as a result of the Russian invasion of Ukraine and the pressures on European energy supplies has intensified. And so we know they are at risk of an energy disaster. But the Northeast is going to compete with countries across the Atlantic and around the world for fuel to generate power and fill up trucks and keep the cold at bay. So we're all competing for this commodity.
Yeah, and I was kind of figuring out how did we get here? Well, here's a part of it. The Northeast is no stranger to fuel constraints. Its dearth of pipelines and refineries means the shale fields of Texas and Pennsylvania might as well be on the other side of the world. And now you've got the problem. We get a lot of our fuel here in the Northeast from Europe. And with the war in Ukraine, that's been constrained.
Right.
And that kind of sets us off as a little bit of a, an island, if you will, in terms of supply here. So that's going to be the issue for this winter in the New England area.
It's going to be like when my dad growing up. Hey, we're lowering the temperature. Put a sweater on and put some socks on, because that's how it worked when we were growing up, to rein in some of those electric bills and heating bills. All right, you're listening and watching Bloomberg Business Week on this Monday. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Our earnings after the bell include Lyft out of San Francisco. It reported earnings that beat analyst expectations. It's a sign the company's cost-cutting measures are proving effective as it prepares for a rocky economic climate. After ours, though, we've got shares of Lyft moving lower. Video game maker Take-Two is down now by 9% post-market. Net booking view disappointed at Take-Two. The Dow, the S&P, and NASDAQ all advanced today. Shares rallied in a broad-based advance that swept up small caps as well as blue-chip stocks. Second day of gains ahead of midterms tomorrow. Morgan Stanley's Mike Wilson said polls pointing to Republicans winning at least one chamber of commerce provide a potential catalyst for lower bond yields and higher equity prices. So the Dow end of the session today up by 423 points, up 1.3%. S&P was up 36, a gain of 1%, while NASDAQ up today by 89 points, up by 0.9%. 10-year yield 4.21% with a 2-year yield of 4.72%. Gold down 4.10, $16.75 the ounce. West Texas Intermediate crude down 0.7%, $91.95 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Paul Sweeney on this Monday here in our Bloomberg Interactive Broker Studio here on Bloomberg Business Week. Well, more than 100 world leaders have started arriving in Sharm el-Sheikh for the UN's annual climate change summit, attempting to maintain momentum in the battle to curb planet warming emissions. And Paul, we've already started to see things kind of come out when it comes to this.
Yeah, and I think one of the real questions is, as they set up some of their goals, kind of maybe get a report card about how they're doing.
Right.
So we're sending some of our smart people over there, including Shaheen Contractor, environmental, social, and governance analyst. That's ESG for those of you in the know. She does that stuff for Bloomberg Intelligence, and she joins us here in Bloomberg Interactive Broker Studio before she jets off to Egypt in a few days. So we're glad we got her before she leaves for this COP27 conference. So Shaheen, for you and for Wall Street, how should we think about this COP27 conference? What should we try to take away from it? What should we look for when we scan all the news?
Sure. So first of all, I'm so excited to be going. I think when it comes to this COP, it's been sort of dubbed the implementation COP. So I think that's going to be a lot of focus and things to watch out for. I mean, we're all fresh with all this news. The UNEP reports, said that we're in levels of warming that are, close to unsustainable. So I think actually
Have you checked out the temperature today?
I mean,
yes. It's November 7th, and we're in the 70s. But anyway, go ahead.
And the one really interesting thing we found in an analysis we did is that companies setting less ambitious carbon reduction goals are allocating more capital expenditure in the next year than those setting more than those with more ambitious carbon goals. Now that's not intuitive,
how do you square
right?
that? What does that mean?
So that's not intuitive at all. You would think that companies with more ambitious carbon goals are allocating more capex to meet the goals, right? But if you look at analyst estimates, so 1 year forward for capex, it's flipped. What that means is companies with less ambitious goals are growing faster. Yay for us, right? They're allocating more capex.
But it brings to my question of, are companies doing what they say they're going to do? Like, is this like when I go to COP27, and the number of people means how many years in a row we've been doing this thing. The United Nations has been holding this thing. So if I go to COP27 in Egypt, which I might just show up there, so be on the lookout, and I go to these companies and I say, at COP26, you guys said you were going to do X, Y, and Z. Did you achieve X, Y, and Z? Are those conversations being had?
So they're starting to. Now, what you're talking about is preparedness, right? You have this ambition, but what are you doing to meet it? So very clearly, if we look at this capital allocation kind of agenda going on, then no, capital allocation isn't being factored into companies' sort of carbon ambition goals because they're not growing faster. They're not allocating capex to meet these goals. Maybe they're too far out, maybe, who knows, but it's really not.
All right, here's what I really care. I know that there's a lot of money going into the ESG space. I feel like we're all looking under a microscope. Shaheen, I mean, are companies actually allocating money in a smart way to move the needle when it comes to, and yay, reducing carbon imprint, and footprint. How about not creating one at all, like to really make a difference? So I'm just curious, what is the big picture as COP27 gets underway?
So it's really complicated. I think when you look at these carbon goals, first, there are 300 ESG characteristics out there that I can name.
That's a problem.
300 plus. The question investors have today is what of this is actually factored into fund selection and ESG stock picking, right? And we tested this for climate ambition, and we did find that companies with more ambitious carbon reduction goals do end up in more ESG funds, which means it actually is being factored in.
But does that mean because they're actually doing good things, or they're just ending up in
Ambition.
ESG funds? No. You know what I'm saying, right?
I know what you're saying. So I think the part and parcel of the problem is that we are too early on. A company this year who said we will reduce our carbon emissions by 30% by 2030, it's very hard to track that so early on in their goal setting progress. I think that's where a lot of the skepticism comes from, and I can see it in both of you.
Well, because it's not the first year we're doing.
Nope. This is 27.
A lot of money have been going in, right?
Yeah.
Into ESG, yes, but these carbon goals, the amount I've seen picked up this year and last year, I've never seen that before. Before it was
the goals. I mean, what companies are
setting
saying that they're going to get.
Correct. The others have, the last few
But what
years.
happens if they don't meet the goals?
Yeah, I don't know.
We'll see. 2030 will come, and we'll see.
Oh, because the 2030 is when
We'll all die.
That's coming quickly.
Wow, that got dark really
And on this
quickly.
UN discussion, we should note that Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio, is the UN Special Envoy on Climate Ambition and Solutions. So he certainly has an interest here. So Shaheen, give us a sense of, what are investors saying? Are funds continuing to flow into ESG funds?
In the US, there's a huge slowdown.
Okay.
In Europe, it keeps going on. So the one thing we noticed this quarter is that most flows actually went into Article 9 funds, which is the highest sustainability category in the EU fund sort of taxonomy, if you want to call it. So that's clear that investors are getting scared, that starting to move money towards what I call the most sustainable. And I think that's just a trend that we're going to see carry on.
It's an interesting world, and I feel like it's still figuring its way out. I mean, there's so much money in this space, and is it, doing what it set out to do? And I don't know. You're going to have to come back on the other side after you go to Egypt, and then you come back. We'll talk more.
Yes.
Shaheen contractor, environmental and social and governance analyst at Bloomberg Intelligence, joining us here in our interactive broker studio. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to get a great take on the content space with someone who has been in the industry. He's over at Sony Pictures Entertainment. He's the CEO. We're going to hear from him in just a moment. But first up, let's get back to the After the Bell news. Here's Charlie Pellet.
Hi, thank you very much. We've got Lyft earnings out. Lyft shares plunging 15% after ours. The company reported weaker than expected rider growth. That overshadowed better profits from higher fares. The company amassed 20.3 million active riders in the third quarter. That missed an analyst's estimate of 21.1 million. Also reporting after the close of trading, video game maker Take-Two Entertainment had cut its net bookings guidance for the full year. The guidance missed the average analyst estimate after ours. Take-Two taken down by 12.8%. Broad-based rally today, though, with the Dow, the S&P, and NASDAQ as small-cap shares advanced along with blue-chip stocks. We had the Dow up 423, ending the day at session highs, up 1.3%, close to session highs, I should say. The S&P up 36, up by 1%. NASDAQ today up 89 points, a gain there of 0.9%. 10-year yield 4.21%. We had the 2-year yielding 4.72%. Spot gold 16.74 the ounce, down 0.4%. West Texas Intermediate crude oil down 0.9%, 91.79 a barrel. Big rally today for natural gas, up 5.5%. Well, as for the overall economic backdrop, Nick Venditti is senior portfolio manager at Allspring Global Investments, and he was our guest right here on Bloomberg Business Week.
We're seeing signs of economic slowdown already, right? I mean, it seems like you can't open the news without another company announcing layoffs or hiring freezes. We're seeing mortgage rates at or above 7%. We're seeing some signs that inflation is starting to turn over. And by virtue of all of those things, I think we are slowing down the economy.
And again, S&P up 36, up 1%. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this past week, Bloomberg Live hosted its Growth Summit, and it featured leaders from large, well-known companies for fireside chats and panels, and it talked about their experiences in growing their businesses and really connecting with their customers. So among the conversations, I had one with Tony Vinciquerra. He's chairman and CEO of Sony Pictures Entertainment. We covered a lot, including how in today's ever-changing and crowded media and content environment, what movie and TV viewers really, really want to watch.
It is interesting that, you know, different times, different environments in the world do lend to the popularity of certain genres of film and television.
Absolutely.
Right now, I think, you know, people, and it's hard to know because this is definitely an art, not a science, as you, I mean, you know that. I think people are looking for some more lighthearted things, some more interesting things, maybe some romantic comedies. One just opened, not ours, unfortunately. Yeah. With George Clooney and Julia Roberts doing very well. We do have a kind of a rom-com coming up with Jennifer Lawrence, which is actually taping or filming in Long Island at the moment. So that'll be a good one. But you know, it is interesting right now. Interesting, challenging, from the perspective of what you think is going to work. You know, if you read the press, everyone talks about how in theaters the only thing that's working is the big tentpoles, the Spider-Mans, the Top Guns. But it's not true. We had 4 films this summer that did really well, and they were all originals.
Yeah.
So,
but, you know, it's funny. I was actually talking with our Lucas Shaw. You know, we were talking about, it feels like, my husband says the same thing. Why do I go to the theater? It's all heroes, superheroes, or horror. That are the real money. I mean,
well, Where the Crawdads Sing was a film we put out this summer. Yes. Did really, really well. The Woman King did really, really well. Certainly not a hero. Well, it's a hero. Viola Davis plays the hero, but it's not a superhero movie. It's a kind of a based on truth and history. Lyle Crocodile, you mentioned, is if you have kids between 5 and 12, great film to go see. And interestingly enough, in the U.S., not working terribly well, but internationally working really well.
Yeah.
So it's kind of a dichotomy there.
Well, it's good that you went there, Tony, because, I mean, you guys are global, right? I mean, different markets. I know you and I talked on our planning call a lot about, like, what's going on in India specifically. Right. So when you look at the global sphere, Right, it is not smart of us. I know I asked, like, global recession.
Yeah.
There's going to be areas that are rougher than the others. When you look at the world, how do you see it?
Well, Spider-Man, which we released last December, almost a year ago, did almost $2 billion in box office without China. You know, in the past, they probably would have done between $400 and $500 million in China.
Right.
We don't have Russia anymore.
Right.
You know, Russia was our top 5 markets. So, you know, it's a challenge, but, you know, you have to go with what you have.
How do you think about those markets? Because I do think about the importance of content.
Yeah.
We think about it certainly as a news organization. I mean, there's a lot of stuff going on, a lot of it troubling. You know, what do you see as your role in terms of the narrative and the conversations that are going on in a world where we have some really tricky topics?
Well, we try not to get too much into politics. And, you know, in my past life, I was very involved in news coverage and TV stations and things. And I'm very happy not to be in that business right now. It's a difficult world.
It's a difficult. Well, what about, like, you talk about China, right? And you guys are not.
Well, mostly not.
Or mostly not.
We didn't have Venom. Our film Venom didn't get into China. Spider-Man didn't get into China. The first Venom did $275 million in box office in China, 0 the second time.
Well,
so, you know, it's not a market that we expect to do business in right now. It's roiled in geopolitical relations, obviously, and something that we're not going to have any impact on.
Well, and that's what I guess, what is the role of companies that are global? And when there's either a part of the world, a country, where there's issues, I say that delicately, you know, is it your responsibility to say, I mean, obviously when there's governments involved and saying you can't do business here or whatever, that's a whole other issue. But, you know, what is the role of companies when you can have such an impact in terms of what you do and you reach so many different people? Do you feel like a responsibility to not be in a certain market because of...
Well, Russia, we did pull out of Russia.
You did, right, as most people did. But
did.
Would you go back? Do you anticipate?
We've sold our businesses there, so we're not in Russia.
Right.
And I don't anticipate getting back there anytime soon.
Okay.
But I wouldn't predict that forever. I mean, the world does change. We are doing business in Germany. We had World War II, so, you know, things do change.
And that's Tony Vinciquerra, Chairman and CEO of Sony Pictures Entertainment. Check out the full conversation at BloombergLive.com/Bloomberg-Growth-Summit-2022. We had so much fun. I know you know this individual, someone who understands this industry. He was at Fox Sports. He was at Fox a long time ago. I asked him about what it's like to be the boss of Spider-Man, what it's like to work with Brad Pitt, but really understands content. And they provide content for, they don't care who wants it, they'll do it.
That's exactly right. That's the Sony strategy. I mean, people are, you know, kind of think about how do I create my own streamer? Do I kind of go it alone? And these guys have said, listen, we create content. That's what we do, and we'll sell it to whoever wants to buy it. And Tony's been doing this a long time. I knew him when he was at Hearst Argyle Television, the kind of the business. He's glad he's not in right now owning local television stations. But Sony's always been a huge, huge studio, so it's good to see them doing well.
Yeah, absolutely. Great conversation. And like I said, head to BloombergLive.com if you want to listen to all of it. It was a fun chat. All right, right now, let's get to World and National News. And Nancy Lyons, she's in D.C. Hey, Nancy.
Thanks, Carol. Both President Joe Biden and his predecessor, Donald Trump, are hoping to provide their parties some late boosts on this, the last full day of campaigning before the midterm elections. President Biden is holding an evening rally tonight in Maryland as Democrats eye retaking the governor's mansion there. Trump is set to stage his own event in Ohio, where he'll push voters to support his hand-picked Senate candidate, J.D. Vance. One of the key congressional races in tomorrow's midterm elections is in Virginia. Many see it as a bellwether for the other races. Congresswoman Abigail Spanberger tells Bloomberg she's been here before.
Everybody counted us as the bellwether for whether or not we were going to flip the House in 18, hold the House in 20, and so once again, we continue to be the bellwether. I guess it's an exciting place to be, and I'm glad we're going to win it, because hopefully that will be a nice beginning to that bellwether evening.
Spanberger's opponent in Virginia's 7th Congressional District is Republican Yesli Vega, who has been endorsed by former President Trump. UN Secretary General Antonio Guterres says, quote, "We are on a highway to climate hell with our foot on the accelerator." He spoke at the COP27 climate change conference in Egypt.
The clock is ticking. We are in the fight of our lives, and we are losing. Greenhouse gas emissions keep growing. global temperatures keep rising.
Gutierrez says humanity must cooperate or perish. Michael Bloomberg, founder and majority owner of Bloomberg LP, parent of Bloomberg Radio, is the UN Special Envoy on Climate Ambition and Solutions. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. Carol Massar along with Paul Sweeney. Paul's in for Tim, who is out this week. And Carvana, you heard Charlie talk about it. Stock finished down about 15-16% today. That's on top of an almost 40% drop on Friday. It's not been good.
No, it's not. I mean, you know, it's an interesting company. Carvana, this allows its customers to buy a car from anywhere. And the company saw its market value skyrocket last year when supply challenges in new car production caused a surge in demand for used vehicles right down the alley for them. So that helped allure investors hungry for COVID lockdown bets, especially given Carvana's focus on at-home purchasing. So it was just a perfect kind of lockdown story, much like a Peloton.
Exactly.
And the stock charts look awful similar between some of these lockdown trades here. But it's a really interesting concept. And I think it has legs long term. It just feels like, and I know the people in the car business, like Matt Miller, but Barry Ritholtz, the folks that really think about this car business every day, they say, hey, this type of retail distribution is here to stay.
Yeah, I agree. I think, like, folks, wake up. First of all, though, you got to remember, I'm looking at the high back in August of 2021, $370 a share. It's $7.39. That's where it closed today. So it is way off its high. But this whole idea of, like, this makes sense. This is seamless, right?
Yes.
Like, this is how you do it. This makes it so much easier. But the pandemic distorted so much. So now we're getting back to what's the reality of these businesses.
And, like, just take the new car business. It used to be you walk onto a lot, there's 200, 300, 400 cars, you could haggle. I'm told those days are over. There's like Kevin Tynan who covers autos.
Hallelujah.
Well, now I got to
some
pay
extent.
MSRP. I mean, because he's only got, hey, I've only got 2 of these on the lot, pal. You want it, you're going to have to pay MSRP. And I'm like, so that business is changing. The used car business is changing. But technology, in this case, really kind of revolutionized a part of the used car market. And it's a cool story, but speculation coming out of that name, I guess, is the easy way to say it.
Absolutely. I mean, way, way, way down from its high. And we'll see where it ultimately, I mean, it's down 96, almost 97% this year. So almost completely gone. Anyway, this is Bloomberg Radio.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Lyft shares after hours. They are moving lower, down now by 12%. The company reported weaker than expected rider growth that overshadowed better profits from higher fares. But again, after hours, Lyft shares are moving lower by just about 12%. The video game maker Take-Two has cut its net bookings guidance for the full year. After hours shares right now, Take-Two down by 15.1%. Activision Blizzard beat analyst estimates for bookings and profit in the third quarter. After hours, shares of Activision Blizzard are trading little changed. An update for the Dow, the S&P, and NASDAQ as stocks closed at close to session highs ahead of the election tomorrow. The S&P was up 36, a gain there of 1%. The Dow today up 423 points, up by 1.3%. NASDAQ was up 89 points, a gain there of just about 0.9%. 10-year yield 4.21%, with the 2-year yielding 4.72%. Spot gold down $7 the ounce, down 0.4%, $16.74. West Texas Intermediate crude down 0.9%, $91.82 a barrel. Natural gas rallied 5.8% today, $6.77 per million BTUs. An update on Wall Street. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, our next guest has already sold 2 businesses to eBay. iBazaar, that was a European auction marketplace he co-founded, then sold to eBay back in 2001 for $140 million, and then was CEO of Shopping.com when it was acquired by eBay back in 2005. That went for $600 million. He is now CEO of the company that describes itself as the Airbnb of cars. We welcome to Bloomberg Business Week Andre Haddad. He is the CEO of the car-sharing platform Turo. He joins us via Zoom from San Francisco. Andre, nice to have you here with Paul and myself. How are you? And remind our audience how your platform works.
Hi, Carol. Hi, Paul. Thanks for having me. Turo, we've pioneered peer-to-peer car sharing. So we've built the very first and now largest car sharing platform on the internet. So you can list your car and earn money with your car when you're not using it, or actually build a small business using our platform, which is increasingly what many of our hosts are doing. And also, as a consumer, you can become a guest and book any kind of car whenever you want to go in whatever destination across all the markets that we serve.
All right, so here's a stat. Many cars are underutilized assets that sit idle 95% of the time, and it's Turo's mission to put the world's 1.5 billion cars to better use. How come I didn't think of that? I mean, that seems like it's right out under your nose. I didn't even think about it. So my question, I guess, Andre, we just got by the way, our producer and our technical director just gave us 2 glowing reviews of Turo. So
one's young, one's kind of older.
Yes, wonderful to hear. Thank you.
So you're hitting a lot of demos.
You're hitting all the demos. What's the legal side of this, the liability side of this? How do you guys deal with that?
We figured that out many years ago. So we have insurance that we offer through our partner travelers here in the U.S. To all of our hosts and guests. And, the experience is pretty simple. When you don't need any particular type of coverage for your vehicle, you just have to have your personal coverage. And then we provide that supplemental coverage when you start sharing your car on our platform.
I love it. I love it. And I can also get a Porsche 911 2017, and it's about $206 a day. This is fascinating. That's cool. Really, really cool. So talk to us about the growth metrics. We're Bloomberg. We're kind of really into this stuff. Talk to us about the growth in the revenue line, your profitability, margin expansion. Walk us through it, if you would.
Sure. The business has been growing quite a bit, actually, over the last few years. As you can imagine, initially with COVID, we were hit quite hard when everybody's businesses shut down and we're all under shelter in place. But after 2020, 2021, and this year, we've seen tremendous growth last year.
What's tremendous? What's tremendous?
Over 21, we grew by 213%.
That's tremendous.
Our revenue, that's tremendous. The first half of 22, we grew our revenue by 85%. So we're continuing to see very strong growth in the second half of 22. So we're very excited about the growth of the business. And For us, it's been tremendous also because it's been profitable growth. We've hit our first EBITDA profitable quarter in Q3 of 2020, and we've been profitable ever since, every quarter since.
One of the big, if not the big trend in the auto business is the switch or the evolution to electric vehicles. How's that impacting your business?
Yes, it's a huge trend in our business. We've actually pioneered EVs, on Turo now for many years. Around 13% of our GBV, or gross booking value, in 21 came from trips that were taken by vehicles that are running on alternative energy. So that's primarily EVs. And more recently, in June of this year, EVs represented 8% of all of our listings. So that's quite a bit higher than the overall percentage of vehicle registrations in the US, which is around 2%. So adoption of EVs has been much higher on Turo than in other places. And, I'm a host myself on the platform, and I've shared several of my EVs over the last few years. A lot of people are using Turo to try out the EV for the first time. There's a lot of questions around EVs. There's a lot of questions about charging in particular. So many consumers who are interested in purchasing one have used Turo as a way to try it for a few days and see how their commute goes, see how charging works, etc.
Hey, Andre, what's been the response, if any, from the traditional car rental companies like Hertz and Avis? Have they thought about getting into this peer-to-peer business?
No, they haven't really. They've tried to use their regulatory power and their influence with airports and with legislators across the country to try to make the space harder for us to compete in. So I think they're concerned about the growth of peer-to-peer car sharing. They're concerned about the growth of Turo, but they haven't competed really commercially against us.
Hey, Andre, a couple questions here. I'm curious, are all your hosts like individuals, or is it possible that car manufacturers, as you say, what a great way to try out an EV? Is Tesla or GM or somebody else calling you up and saying, we want to host a couple of cars. We want to be a host so people can try it out. Is that happening?
It is actually. It's a great observation. So, our core business is really all about consumers who are sharing their cars because, cars, as you mentioned, are idle 95% of the time, and they're increasingly expensive to own and to maintain. So our core audience really is consumer hosts. We have since expanded into entrepreneurs who are building small businesses on top of our platform. Now we have a big chunk of people who are sharing not just one car or two cars. They may have listed 5, 10, 15, 20 cars now on the app. And more recently, we've seen OEMs actually take notice of Turo. So we've had partnerships with many, in particular Nissan and Hyundai more recently, where they've been using our platform to either put some of their owner sort of fleet cars that are on their dealership lots available for people to be able to book on Turo, or to actually launch new models, which has been the case for Hyundai with the Ioniq 5.
Very interesting. Speaking of launches, gotta ask, you filed in January for an IPO. What's the status of that? What can you tell us?
Yeah, we filed. We flipped our S1 public in January of 22. We've updated it twice. We are continuing to look at the financial markets. They haven't been particularly hospitable to tech IPOs, as you know, for the last few months.
Yeah.
So we're not in a hurry to go public. We're profitable. We're growing fast.
Okay.
I really do want to do it because I think it's a great opportunity for us to make the brand better known by the public.
Right.
And to bring peer-to-peer car sharing to the masses.
Wow.
So I definitely want to do it, but we're going to do it when the time is right.
Andre, come back soon and promise us when you do go public, you'll come join us and talk about it. But fascinating business, and we'd love to talk more. Andre Haddad, he's the CEO of Turo, joining us from San Francisco. Paul, thank you, and have a great evening.